Hello and welcome to Business Morning right here on Channels Television. It's the Thursday trade that's kicking off right now. But let's get to the top stories and conversations that get you ready before you make those investments. Starting off with oil now, we're seeing oil prices. They've dipped today after gaining 3% in the previous session. As investors are wary, higher U.S. tariffs may be reinstated, which could cause lower fuel demand. And as major producers are expected to announce an output hike sometime this month, I think on the 6th, and we're seeing a big drop there. We did see oil there rising about 2% last night. I thought maybe that trade might actually, that bull run could come back at this point, but we see that drop this morning, $68.42 a barrel. Investors there and traders, they're having to analyze a couple of things at this point to make that decision at this point. So we're seeing 1.02% drop for WTI crude. We've now seen a bigger gap between both prices, unlike what we saw yesterday. Both contracts rose to the highest level in 1 week, and that was yesterday, but that's all wiped off at this point. Now, the federal government says it has approved 37 new crude oil evacuation routes across the country as part of reforms to bolster production and curb theft. It also said the number of crude oil rigs that has increased from 8 in 2022 to about 44. This was disclosed by the chief executive of the Nigerian Upstream Petroleum Regulatory Commission, Mr. Gbenga Komolafe, while speaking at the 24th edition of the NOG Energy Week 2025. Mr. Komolafe said the new evacuation routes were part of a broader strategy to restore asset integrity, ensure secure transportation of crude, and support the ongoing Project 1 Million Barrels initiative. Yeah, that'll be great to see at this point. To other stories, to boost digital energy inclusion, the Nigerian Communications Commission and the Rural Electrification Agency have officially launched the NCC REA Collaboration Committee to boost Nigeria's digital energy inclusion goals. According to a statement yesterday by the NCC's acting head of public affairs, this collaboration will focus on deploying renewable energy solutions that's to support telecom infrastructure, particularly in rural and underserved areas. And the International Monetary Fund now expects Nigeria's economy to grow by 3.4% in 2025, up from its earlier 3% forecast. It cites improved oil output, a new refinery, and a strong services sector for the upgrade. In its latest Article 4 report, the IMF urged the government to revise its 54.99 trillion naira 2025 budget. All right, so right about now, we're going to be joining live coverage there. It's a media parlay right there at the Honorable Minister's residence. That's Honorable Mr. Yesam Wike right there in Abuja. He's going to be talking a lot this morning as expected. So we're going to be joining that live coverage on DSTV. We can continue tracking the markets on other platforms that we track at this point. All right, let's carry on now with what's playing out right here in the markets and in Nigeria there. So we've seen the IMF revision. They're saying it's based on overly optimistic oil price assumptions. It says it remains exposed to external shocks despite recent reforms. That's what the IMF is saying about the plans by the Nigerian government. The fund welcomed tax reforms and banking recapitalization, but called for faster support to the poor and more investment in infrastructure like power, social services to sustain inclusive growth. So those are the recommendations by the IMF there and for the federal government. All right, in the first half of 2025, we see that African startup ecosystem that demonstrated remarkable momentum and resilience. Data from the investment tracker firm, that's the big deal, shows that startups across the continent collectively secured over $250 million funding during May alone, underscoring sustained investor interest despite a broader global funding dip. This mid-year report unpacks the key themes shaping deal flow. It highlights significant funding rounds across industries and offers critical insights into which sectors investors are doubling down on. As a result, the H1 performance is very solid and marks a significant improvement, about 78% up compared to the first half of 2024, when only $800 million had been raised. H1 2025 is also on par with H2 2024, with about $1.4 billion raised in Africa by African startups, just a minor 1.5% decrease. That's if you're looking at it from a year-on-year basis. All right, the Minister of State for Industry, Mr. John Enos, announced that the revalidated National Industrial Policy and Integrated Vision and Execution Plan will be unveiled by July 31st, 2025. Speaking at the United Nations Industrial Development Conference in Spain, Mr. Enos he also gave highlights of how Nigeria is positioning itself locally for global trade. Take a listen.
Permit me to introduce to the Assembly an unprecedented reform, which for the first time in Nigeria's industrial history, we've launched the Industrial Revolution Work Group, IRWG, a high-level implementation-focused coalition comprising public institutions, the private sector, regulators, financiers, and development partners. The RWG is not only a think tank, it's also a do tank. It's not a policy paper, it's a delivery platform. Its mission is singular: to drive Nigeria's industrial growth agenda with verifiable action and accelerated results. And for the first time, we are harmonizing national industrial policy with sector-specific interventions under one coordinated execution framework. The Industrial Revolution Work Group is built around 5 thematic engines. 1, energy security and infrastructure development. 2, affordable long-term finance and incentives. 3, bureaucratic reform and regulatory efficiency. 4, promotion of made in Nigeria products and counterfeit control. 5, skills development and innovation. Each thematic pillar is led by Nigeria's foremost institutions and captains of industry, working collaboratively with the ministry under my office to deliver milestones within set targets, 90 to 180 days. And I'm proud to share that an expected revalidated industrial policy for the country, which represents an integrated vision and an execution plan, will be unveiled by July 31, 2025.
And as we move further into the second half of 2025, it's a perfect time to look back and assess the investment landscape of the past 6 months. The first half of the year has certainly delivered some interesting twists and turns across various markets. Today we're going to dive into a review of the best performing assets, specifically focusing on Nigeria's stock market and how it fared, as well as taking a closer look at the performance of major global assets, like the likes of Bitcoin and gold. What insights can we gather from their journeys in the first half of 2025, and what might that tell us about the road ahead? That's our conversation now. Joining us for this is Dr. Ayodeji, the MD, Optimus by AfriInvest. Great to have you on the show, sir. Good morning.
Yeah, good morning, Adi. It's great to be here.
Fantastic. And yeah, definitely, a couple of investors have, I guess they've been smiling, to the bank in the first half of 2025. Let's get a general performance overview now. Looking back at, the first half, which asset class, broadly speaking, surprised you the most with its performance, both positively and negatively?
So, thanks. It's been an interesting time if we look at within the last 6 months, and if it's based on performance of the asset classes, gold stood out with over about 24% return in half year. Same thing with silver. So you would see that those non-traditional assets coming to the stock market, which most people are more familiar with, return about 16%. But beyond that, when you break it down, you would see the surprise is that the banking sector was like the toast of investors. And based on the performance, the year-to-date performance as at the end of June was around 18% compared to fast-moving goods sector, which returned close to about 50%. You would see, so the market has favored the non-financial stocks. We're all used to the banks driving performance, but what we've seen is that the non-financial stocks have drove performance in the first half of the year, and the reason is not far-fetched, because when we checked last year, because of the FX environment, a lot of these companies had to book significant FX losses, which eroded even some of them, their shareholders' funds were wiped out. So on the back of that, investors are taking position significantly, given that when you check the top lines, which is the revenue or turnover of these companies, have continued to grow despite the FX challenges that they experienced in terms of accounting or reporting last year. So those are some of the factors that shape the Nigerian stock market. We also saw the domination of retail investors, though there's been an improvement of foreign participation, because if we look at average in 2024 was around 16%, and that has grown to about 20-something% in 2025. So seeing interest from foreign investors, though still very low. When you also look at, you spoke about the other asset classes, you look at cryptocurrency, it's into two halves. So when you look at the Bitcoin has returned close to about 20% this year, while Ethereum, which is the second largest, has gone down by about 27%. So you would see, but by and large, for investors that have diversified, because when we talk about investment, portfolio diversification is key, because these asset classes sometimes don't all perform well at the same time. So diversification would have really helped, and I can tell you for fact that investors in the Nigerian stock market, especially those that position significantly in non-financial stocks, are really smiling to the bank.
Right. All right, Mr. Ebo, let me come in there and just take you back to that gold story at this point. We've been hearing about, global central bankers there, stacking up gold at this time. And, they've been doing that for a couple of years now. And I remember reporting gold prices around February 2022, the period, Russia invaded Ukraine. And I remember gold was trading about maybe like $1,600. Per ounce, that time. Then, fast forward to now, it's been quite the rally, so far. And I'm sure some investors here, or maybe, prospective investors, will be wondering, how to play in that gold market at this point. Is it just going to the market now and just stacking up, gold? Maybe just buy gold chains, you stack all of that up. Is that how you profit, from this kind of gold rally? Or is there a way we can invest in it in Nigeria's capital market? Maybe something that tracks gold prices?
Okay, very interesting question. So it's better when we talk about the gold, for the investor to benefit is to buy what we call the derivatives. Those are the instruments that are tied to gold. So because it's about the price movement that investors wants to benefit. So when you look at Nigeria, there's what we call the new gold that available that you can buy, because the underlying asset is also gold. So as the price of gold moves up, it will impact on the price of that particular fund or that index. Also, you also have gold SPDR also on the US stock exchange that you can buy. So the underlying assets, once it's gold, you also benefit from that price movement. So it's better you don't need the physical gold. I know some people prefer they invest in the physical gold, but for the investors and the ease of entry and exit, and also security, the best thing is to buy the securities that have been built or that have been built on gold, which underlying asset is gold. So you have it both in Nigeria, you have it both abroad. So you can target it. Yes, it's like you mentioned, it's almost trading at all-time high now, and is projected that it may even also continue. And the main reason is that when there are uncertainties, you see the global central banks are also loading up sometimes for them, they buy the physical gold and they are loading up, and it's market of demand and supply. So what I would advise investors is to gradually accumulate and also wait for, there will be period when there may be a bit of stability, because that period you see, we call it rotation or into different asset classes. So there may be some of the investors may be selling down on some of those gold to come and take advantage of other asset classes. So that's the time to also lock in. So it's important that gold should be part of your portfolio in form of asset ETFs. So there are exchange traded funds that tracks gold. Investors can take advantage of them and they can benefit from that upside. Even last year, the average return was, I think, about 14%. So it's been, given the uncertainty that we've been experiencing, the Russia-Ukraine war, the gold, the global tariff war, rather, all those things have been creating instability, and that is when you see people moving into what we call safe haven to invest in what they know that is secured and will not fluctuate with the global crisis.
So seeing gold, I think getting to about $3,400 per ounce, or maybe a little higher than that. Is it too late to the party, for investors looking to, stack up gold at this time? Or is it better to wait for some kind of major pullback? And is that possible at this point? Because it seems, well, I guess there's still uncertainty at this point.
Yes, so I think that the strategy used across asset classes. So yes, even if we're saying late to the party, you can take a bit of the pie, perhaps, because no one can fully ascertain what the direction would be when those uncertainty would be settled. So you can take a bit, but be prepared to buy more if there's a reversal, so that you have it down and keep. But you must have long-term perspective. So if you are just trying to speculate that, can I buy into gold and in 3 months I want to turn money, then that investment is not for you. But for long-term investors that is accumulating wealth or building wealth, then you can buy a bit now, even at this current level, because projection by some of the top investment bankers still sees that there's significant upside in gold. But when you see that pullback, like I always call it, like promo prices, you've seen it, if you are comfortable to buy at the $3,000 per ounce level, then if you see it at that 2.5, then it means that you are buying at a discount to what is been trading for the past few periods. So that's one strategy that investors should look at. But it's not for everyone. You need to understand your investment objective, and long-term play is what is best in this type of assets.
All right, let's look at some of the best performing stocks in Nigeria. That's the Nigeria's stock exchange. I believe the leader of the pack there. That's Beta Glass there, giving us over 400% rise there. So quite impressive, 415%. Honeywell Flour Mills 241%. That's for the first half of 2025. We also have the Initiates PLC. That's TIP there. Delivering 230%, Vitafoam 222%, and definitely we're seeing the all-share index hitting new high at 121,000 points. So, Mr. Ebo, Dr. Ebo, I don't know if you saw this coming, for the first half of 2025.
No, I won't say I saw this coming. The expectation was that the non-financial stock was going to deliver. Well, even though we saw that the banking stocks also moved up, but we're expecting that there would be no major movement there given the new shares that they were going to list. But you can look at some of like the Beta Glass you mentioned. You would see that the sector where they play, it's like a monopoly, and they are going into significant expansion. So in the last 2 months is when the price moved significantly because of the area where they play, and they are also even trying to export. So for most companies that are producing, you see likes of Okomu, they may not feature here, Okomu or Presco, that also moved significantly. The product, the business that they do is also significant. But I would also advise investors this period, because what we are seeing in the market now is that because of the market gyration that we're seeing, investors are also buying stocks that don't have fundamentals. All I call it betting, with the hope that maybe it will sustain that bull run. These are some of those that at the end of the day, if there's a pullback, they have negative experience around the market. So investors should understand the company they are putting their money in, understand the business that they are doing. And when you see that they're strategic, the products that they sell are very unique, and competition, especially leaders within that space, then you can be rest assured that that stock or that company, even if it's not moving now, over time, you would see that it will also gain. You see, like of MTN that started very slow, gain almost 100%. And now, so these are companies that investors can see, you understand how they make money. And if you buy the good names and you hold good names, it will definitely deliver over time.
Right, and with what we've seen so far for these stocks, for the first half of 2025, do you still see more headroom, to rise, for these stocks, or do you think these ones might, have to give up some of those gains, going into the second half of 2025?
So I think that the major defining factor would be the half-year results, which investors are anticipating. By end of July, would have seen some of the major companies publish their result, and those that will also be paying interim dividend. So based on expectation of their revenue, if we see a major growth in revenue again, it will be able to, the market will sustain that momentum. But if we see a reversal, the expectation is that most of the companies should also deliver positively this period, because FX have been stable. It has even appreciated. It appreciated towards the end of June. So they are marking to market their FX position. It should even be a gain for them compared to what we were seeing last year. So there's still enough upside. And if we have the foreign guys coming in significantly, it would impact on prices positively, because that for our market, when you look at the size of our market, it's still relatively small. So when they bring in their dollars, that some of those top stocks and NGX 30 stocks are some of the stocks that provides them liquidity, and those are the stocks that would also enjoy the upside. So it's going to be scenario based. It's not given. Expectation is at least skewed towards that the positive sentiment will be sustained.
Definitely, I'm sure some of the investors that maybe did not participate, in the first half in this market, some of them might be beating themselves up now, saying, "Oh my goodness, why didn't I buy Beta Glass, and why didn't I buy some of the big performers there?" But my question now is, how do you identify these kind of movers, before they actually make these big moves?
Okay, interestingly, the first thing you need to look at is the business where they play. Are there policies that favors them? So you would see that when most people were running away from MTN, but was clear, people were anticipating that there will be tariff review, which will be positive on the revenue. Look at Okomu Presco. The demand for their product has continued to remain strong. Most of their consumers or their customers will prefer to buy in Nigeria than import. So those are the areas how to identify. Like when I looked at CWG some months ago, look at their clients. I saw that there were banks that they provide services to oil and gas company. So it was almost like a no-brainer that it was going to be a matter of time before it will move. And we saw what had happened in the last 2 weeks. So those are the ways, or the idea or strategy rather, to identify companies before they move. Look at what they do. Also monitor their quarterly performance and see if their revenue is growing. So if you catch them early, it's the market, we say those that are willing to take the risk are those that will also benefit from the reward. But strategically, understand the business that they do, position ahead. Once you believe in that business, Warren Buffett will always tell, if you are not willing to hold a stock for 10 minutes, don't even bother to think of holding it for a longer period. So it's better to understand that perspective, and it will be easier for you to catch, well, we'll see if I use the word in quote, catch them young at the early stage, and you'll be able to also benefit from the upside.
All right, Dr. Ebo, I also remember that so Warren Buffett also said, sell when the market is greedy and buy when the market is fearful. You know, looking at the NGX at this point, it seems really greedy.
Yes, when you check the index, it's moving towards the greedy sentiment. So depending on your strategy, you know, it varies. So if we're advising, if it's a short-term investor and you know that the period that you have is not more than 12 months, you can take profit on stocks that you have seen 100%, 200%. Sometimes I tell investors, take out your capital, leave your return. So in case if market will reverse, because what we call there's always difference between a paper gain and realized gain. So it's until you sell before you can be excited that you made money, because we shouldn't get carried away and forget that investment in stocks also come with risk. It can be volatile. If a policy comes in now, direction can change. So profit taking is always also advised. But if it's for long term and you are just accumulating maybe towards retirement, you buy every month, you don't really need to bother. A period when if the market reverses, you know that some of those stocks that you bought, you also accumulate them at a lower price, which means that it gives you higher upside potential even as you grow, as you build your portfolio. So your investment objective must be clear. And if it's short term, this is also the time to take profits on some positions while you wait for a pullback. And for long term, you don't have anything to worry about once you are holding good stocks. The main thing I would always emphasize is investors should not speculate, and also always understand why you are buying a stock.
All right, you heard it there. That's a good place to anchor it. Don't speculate. Just make sure you do your own research before diving straight into that asset class. Thank you so much, Dr. Ayodeji, MD, Optimus by Afinvest. It was great having your perspective today, and we hope for a better second half in 2025.
Always my pleasure. Thank you for having me.